One of the most common questions from new freelancers is whether they need an LLC. The answer depends entirely on what problem you are trying to solve, because an LLC and a basic sole proprietorship have more similarities than most people realize, especially when it comes to taxes. Let me break down exactly what an LLC does and does not do for you as a freelancer, both legally and for taxes, so you can make an informed decision. First, let's talk about what a single-member LLC is from a tax perspective. When you form a single-member LLC, the IRS treats it as a disregarded entity. That means for tax purposes, it does not exist as a separate entity. Your LLC's income and expenses still flow directly to your personal return on Schedule C, exactly the same as if you were a sole proprietor with no LLC at all. You still pay self-employment tax at 15.3%. You still file a Schedule C. You still make quarterly estimated tax payments the same way. From a federal tax standpoint, a sole proprietor with no LLC and a sole proprietor with a single-member LLC have identical returns, identical deductions, identical self-employment tax. The LLC by itself creates zero tax savings. So why form an LLC at all? The primary benefit of an LLC is legal, not tax-related. When you form an LLC, you create a separate legal entity. That separation is what gives you personal liability protection. Here is what that means in practice. Suppose you are a freelance web developer. A client claims your work caused significant business losses and sues you for $200,000. As a sole proprietor with no LLC, you are personally liable for that judgment. The client can potentially go after your personal bank account, your car, your home equity, your personal savings, any personal asset you have. The lawsuit follows you personally because there is no legal separation between you and your business. With an LLC that is properly maintained, the lawsuit is against the LLC, not against you personally. Your personal assets are protected, as long as you have not commingled funds or done anything to allow a court to pierce the corporate veil. The corporate veil is the legal term for the protection the LLC provides. Courts will pierce it if you have not actually treated your LLC like a separate entity. That means separate business bank account, this is non-negotiable, separate business credit card, no mixing of personal and business funds, proper records, and sometimes, depending on your state, proper documentation of major decisions. If you mix your personal and business finances, use the business account for personal groceries, transfer money between accounts casually without records, treat the LLC like a personal checking account. A court can say the LLC never truly existed as a separate entity and hold you personally liable anyway. The formality matters. Now, the types of liability protection an LLC provides vary by state and by the nature of your work. An LLC protects you from general business claims, breach of contract, business debts, client disputes, slip and fall accidents if you have a physical location. It does not protect you from your own professional malpractice or negligence. If you are a freelance accountant who gives bad advice that costs a client money, or a photographer who causes an injury on a shoot, the LLC does not protect you from your own personal actions, errors and omissions. Insurance and general liability insurance are the tools for that. Let's talk about state costs, because this is where some freelancers pause. Forming an LLC typically costs $50 to $500 in state filing fees, depending on your state. But the annual maintenance cost varies dramatically. California, for example, charges a minimum $800 per year franchise tax for all LLCs regardless of income. Delaware charges $300 per year. Wyoming and Nevada are known for low annual fees. Some states have no annual fee. Understand your state's ongoing costs before forming. Now, here is where taxes get more interesting. While a single-member LLC has no tax difference from a sole proprietor by default, the LLC gives you a flexible structure to elect different tax treatment if your business grows. An LLC can file Form TWE-553 to elect S corporation tax treatment. This is the strategy where you split your income into salary and distributions, with only the salary subject to payroll taxes. At $80,000 to $100,000 or more in net profit, The S-Corp election through an LLC can save $10,000 to $15,000 or more per year in payroll taxes. The LLC provides the flexible legal wrapper. The S-Corp election provides the tax savings. Most freelancers start as a sole proprietor or plain LLC and later add the S-Corp election when their income justifies it. An LLC can also elect C corporation treatment by filing Form 8832, though this is less common for freelancers and introduces double taxation complexity. For 2026, whether you are a sole proprietor or an LLC taxed as a pass-through, you can still claim the 20% qualified business income deduction, assuming your income is within the applicable thresholds. The QBI deduction provides the same benefit regardless of whether you have an LLC. Who should strongly consider forming an LLC? Freelancers with significant client contracts and meaningful financial exposure, web developers, consultants, designers, marketing professionals, anyone doing work where a dispute or claim could result in a lawsuit, anyone with personal assets worth protecting, home equity, savings, investment accounts, freelancers who want the flexibility to elect S-Corp taxation later. Who might be fine without an LLC? Freelancers just starting out with minimal income and minimal assets. Those whose state imposes high annual LLC fees that outweigh the benefit. Freelancers whose work carries low liability risk and whose state costs are significant. The practical recommendation: as soon as you have meaningful income and any personal assets worth protecting, the cost of forming an LLC, typically $100 to $300 in most states, is one of the best decisions you can make. The legal protection alone justifies it. The future flexibility to elect S-Corp taxation when you hit the right income level makes it even more valuable. Remember, the LLC itself does not save you taxes. Do not form one expecting a tax windfall. Form it for the legal protection and the structural flexibility. The tax savings come later if and when you elect S-Corp treatment. Subscribe for more tax and legal clarity for freelancers. See you in the next one.